Then, the purchases debit book had been undercast by 2.8 million. The purchases debit book had been undercast. So it means the figure of purchases that was reported in the income statement, it was these purchases, that item there, it was wrong. It was less. It was undercut by 2.8. So what are you supposed to do here? You go to the journal, you debit purchases, and this is shillings, 1,000, shillings, 1,000. So that is 2,800, and the credit what? Suspense. 2,800,000. This amount, it was only on the purchases account, more or less. Okay. So what you normally do, you can have your suspense account, isn't it? So that you can do part A and part B simultaneously. 2,800. Narration. This is correction of error. Now corrected. Number 2, an item of equipment costing 2.6 million had been debited to repairs account. Depreciation on equipment is charged at the rate of 15% per annum. You are going to debit the equipment account. And credit repairs. So this equipment, instead of debiting in the equipment account, they are debited on the repairs account. Yeah. Do you know that scenario? This is the repair, isn't it? Mm-hmm. But in the equipment, there was none. Okay? So what do? You put this here so that this one cancels. Yeah. Then you come and put it here. This is what you've done. Mm-hmm. This is to transfer wrongly charged to reverse. Like that. Because there was an omission. So it shows that we didn't calculate the depreciation for this amount, isn't it? Yeah. Yeah. So that's where the question comes in. So the 2,600 was not charged what? 390. So it means also in our statement of financial position there, up there, we have equipment, isn't it? And we have depreciation of equipment. That depreciation of equipment was not correct. Yeah, because there was no this. Yeah. Okay? That's which kind of an error? That's an error of omission. It did not affect the trial balance also. It is just like this one. And this one is an error of omission. Okay? Yeah. So you debit depreciation 319 and credit the accumulated. You explain is to charge depreciation a debit balance of 2.4 million for a debtor had been omitted from total accounts receivable account. So you debit the account receivable 4 million. Then the side of sales. The side of account, it was properly credited. You credit what? This one, it was the debtors and sales. This one was correct, but this one was omitted. So when you put it, you also put it here. 2, 400. To record omitted data. Then an entry of 2.1 for return outward was made in an error in the sales daybook instead of purchases return daybook. You remember when you are talking about the books of original entry. So that was an error of original entry. Here you are going to debit sales 100 and credit returns 100. Then you say that is to correct. A check of 2,250 paid to a creditor was correctly posted in the cash book but credited in error in the creditor's account. You debit the creditor's account, but instead of the creditor's account, it's like this. These are the creditors that we are talking about. This is our creditor. Okay? This is bank. Okay? So, this is our creditor. This is the bank account. Okay? This amount is correctly posted in the cash book. So, in the cash book, it was okay. Okay? And then the double entry should be what? Here. But we did what? Now correct it. To ensure that it is here, you double this amount. On this side. So you are going to debit creditors. That is it. So that at the end of the whole thing, how much will be the balance on the creditors account? 2250.
Yeah.
If you put 2250 here, the creditor will not have any balance. So you'll be giving us a wrong information. There will still be an error. So to correct it, double the amount. Okay?
Yeah.
And then this double entry of 45, where we need to go? And the credit, suspense.
45.
Clear? Goods valued at shillings 220,000 were withdrawn for personal use, but no entry had been made in the books. So when the goods have been drawn, we debit drawings account 220 and credit inventory 220, and then in the rate to record a bad debt of 1,250 was yet to be written off from the accounts receivable account. So normally what happens, we have bad debts written off. That's the next thing that you're going to do. So in case a debt has stayed for a long time without being paid, there is no reason every time when you are making the financial statement for the last 10 years, kuna kuwaga na hii na alikufa, isn't it? Yeah. So such debts should be written off. Okay?
Yeah.
So when we're writing off a debt, what do? We transfer this amount to the bad debts account. So if you notice that a debt has not been paid for a long time, it is pending. 5 years, 10 years is imeisha. So that's a bad debt. Okay, that's an example. A debtor dies, that's a bad debt. Okay, a debtor is declared bankrupt, that's a bad debt. You transfer the amount to a bad debts account. So you open a bad debt account, okay, and transfer all the debts that you know that here is equal. Instead, next year we carry forward the balance again. Nashina nikionyesha I have current assets, debtors, na hawakufa. So you transfer this amount from here to here. Is it clear now? Yeah. Then from here, you take it to the income statement. By crediting here and debit the income statement. By debiting the income statement, you mean you charge it in the expenses. Yeah. If you put the income statement in T format, debit side in our expenses. So these are the steps. So now for now our clients, the BD traders, we are going to debit the bad debts, the credit accounts. Then you say this is write off and so on. A discount received of 590 had been correctly entered in the cash book, but had been posted on the wrong side of the discount received account. Discount received were on this side. So it is correctly entered. It's how much? 590. But when it comes to now transferring to the discount received account, it was posted yes. So when you come to correct it, you put it now here. Ikiwa how much? Here you are going to post how much? 1180. And double entry IE. So this one will be how much? Discount? 11. So you put it here. You debit. Suspense. 1180. And credit. 1180. Discount. Received. Posted. To the wrong side. The reason why I like it going simultaneously. Now you don't need to go back to your journal and start looking where is suspense. So you open one page, you do the journal, the other page, you do the suspense. Then, when you are posting in the journal, I said that the account to be debited should start at the margin, the account to be credited should be a few centimeters inside. Everything, if you look at it from the beginning, that is what I've been doing. So by look at it, you know that this is credit. Then, now when you do that, you come here, you correct this. This one should be giving an amount of how much?
9,700.
9,700. 9,700. So that means you have eliminated now the suspense account. So, never ever will you ever find a question on correction of errors not affecting trial balance. It comes in theory. But theory, so many A's. But for correction of errors is a very common question. So you need to do a lot of practice so that you get used to it and you increase the speed of finishing that particular question. You get used to interpreting the error the way we have been interpreting it here, so that you post the correct thing. If you post the wrong thing, then this one will be wrong. Then let's go to number C. Yeah, number C. Statement. Adjusted profit for the year ended. Now we have to put this title here. Okay?
Yeah.
Ukikuja kufanya watu msaka, what are you doing? What are you doing? Utakuja kwa market. Is it a suspense account or nini? So it should have a heading, very clear heading. Noting that if you are in a firm, you are dealing with multiple clients, so kila client has more identify. The company law, the Act says all the accounting documents bear the name of the firm, or the accounting and any subsequent document. Every document of the company should have the company's name. Okay? So that is why even our financial statement, they are not excluded. Okay? Yeah. So now the profit that is there in the question, can you see the net profit?
Yeah, the net profit.
It is not correct. Okay?
Yeah.
Because there is suspense. So what we are now going to do, we're going to do that statement here. And you get the details and shillings, those. Then we start with the net profit as per books, or the reported net profit, whichever name you could use. Net profit, whichever name, you can use any of the two names. How much? 196,000. And remember that is million, so you have to put another 1,000 here. Then, now look at those items that you have corrected in the journal. Our journal, me I don't have the journal now. Your journal there is the purchases undercast. If the purchase is low, is undercast, which effect does it have in the net profit? Does it make the profit, does it show the high profit or low profit? Hapa we have sales, sindio? 10,000, sindio? Opening stock, 3,000, okay? Purchases, 5,000, okay? You get what? 8, sindio? Closing stock, let's say it's 2,000, sindio? So this is the cost of goods sold, okay? Which is 6, isn't it? Then our profit here is, this is our gross profit, isn't it? To achieve. Now the purchases have been undercast. That means we have reported, instead of 5,000, we have reported 4,000, isn't it? It's what we mean by purchases undercast. So when purchases have been undercast, this one will be 7, isn't it? This one will be 5. Our profit will be more. Sindio? So to correct, we have to less. Sindio? Because the correct purchases is
5,000.
Yeah. So if you want to correct, we have corrected now the error. It's not 4,000, it is 5,000. So what are you going to do to the profit? We're going to less it. Sindio?
Yeah.
Yeah, you get now my point. Yeah. So I want you to understand it this way. When the purchase is undercast, the profit becomes more. When the purchase is overcast, the profit is less. And vice versa when it comes to sales. Put it now that clear. So that in the next subsequent questions, you don't need to go back here. Okay? Fine. So here, we are going to less what? Purchases undercast? 28. So we just do it like this. It's a statement. Okay? What about the equipment? The equipment was put in the repairs account, isn't it?
Yeah, instead.
So, what was the effect on the profit of the company for that? So, are we going to add it back to the profit or to less from the profit? Is it making our profit to be more or to be less? The repairs, it was overstated, isn't it?
Yeah.
The equipment was put in the repairs. So, hapa, we have the gross profit. We have said it's 5,000, isn't it? So, you come to less expenses. Our expenses here, one of them, it is what? The repairs. These repairs, they were more. Sindio? They were overstated. So the original profit, let's work with the original profit, okay? The repairs here, they are 2,000, isn't it? So our net profit will be 3,000, isn't it? Are you together? Now the repair here, they are forecasted, isn't it? So to correct the error, and we have credited the repairs. We have reduced now the repairs, isn't it? To 1,000, isn't it? So our profit is, so our error, we didn't make the profit more or less. What should we do to the profit now? We should, exactly, add equipment. Just try to look, this is 2,600, 20 about depreciation. Depreciation of equipment, it was not there. So it was making our profit to be more. So depreciation expense. Yeah, so kama hiyo inaitwa straight haraka. So you just raise it, isn't it? Haikuwa imeanziwa. It was not deducted. So you deduct it now. Depreciation on equipment. Depreciation on equipment, it's 390. You less, okay? Then, bad debts written off, it was also not charged in the profit, isn't it? It's an expense, it was not there. So you less it also, isn't it? Yeah. This, bad debts, 1,250. Also you less. Then also, discount received. It was not there, okay? Discount received is an income, so it should be added. Add discount received. Then 80. Then what else? Goods drawn for personal use was also not there. You less. Goods drawn 20. You less also. Okay? So what you get here, it is what? The adjusted or the correct. So confirm whether you get a figure of 125, 120. So our discount received here, you add, not deduct. So when you do like that, our correct net profit should be 125,120,000. When it comes to statement of financial position, we have said that we have two ways. You can do it the way the examiner has done it in the question, it will be marked. You can also do it the way you know. The amount in shillings thousand. You start with assets. And inside of the assets, you have non-current assets. So non-current assets, you have plant and equipment, you have costs, put it here. For plant and equipment, the cost is 696,000. Nilipatiwa plant and equipment 634,000. And then 634,000. To correct errors, what did we do in the plant and equipment? There was an item of plant. This way. Our plant account, it had a balance breakdown 634,000. Then when we did the correction, I did this. The 2,600. So then, so our equipment now here will be how much? 636.
600.
600. That is the now the correct amount for the equipment. Then what about the depreciation? They are accumulated. Balance brought down 72,000. Then there is the one that you corrected. How much? 72, 390.
Yeah.
Now what is the net book value? So when it comes to assets, this one presents cost. This is the accumulated depreciation, and this is the net book value. 564, 210.
Yeah.
Fine. Furniture and fittings. Cost
70,000.
70,000. Accumulated depreciation
14,000.
14,000. Net book value
56,000.
56,000. Then total
Total assets.
and current.
Okay.
So for example, kimbia kwa hii one. Then so easy, whatever you get, you close it there. Okay?
Yeah.
But this one it will remain. So 620
10.
to 10. Current assets. Current assets, we have inventory. So our inventory, original inventory is reported as 280,000. In this inventory, this one was not removed. So you less it, you get 27.
January. 27, 780.
780. That is the exact inventory. So inventory, 27.
780.
Any other current assets? Accounts receivable.
Yeah.
Accounts, 57,000.
Yeah.
And then there was an error, 2,400.
400.
So our correct inventory, a bad debt here. So this is 59, 59,400. Then less
1250.
bad debts, 1250, 150. That's the correct account receivable. 58, 150. So if you don't have any other current asset, you total this. Total 930. Then this is the total. Total assets here, 706,
140.
140. Then go to the equity or capital liabilities. When it comes to capital liabilities, capital 694,000. Airport adjusted net profit, how much? 125 for 20 drawings. So our drawings remains 160,000.
Okay.
Less 659.
120.
Current liabilities. Current liabilities, we have accounts payable. The income statement we have
50,000.
50,000. Then there was an error. The error was, so this multiplied by 2, it becomes 4,500. This is 45.
500.
500. So let's continue from here. 500.
Yeah.
Then bank overdraft.
Yeah.
1520. So total current liability 47,020.
Yeah.
47,020. Add this 706.
140.
140. Just like the assets. So the current, this is the